My name is Nate Crampy. I'm the Vice President at Summit Investment Advisors, and I want to talk through some of the new tax laws that are out there for 2018. And today we're going to be talking about deductions for charitable donations. Now, as reported by the Wall Street Journal in their new tax guide, the number of tax return claiming deductions for charitable contributions will drop by more than 50% as a result of the new tax overhaul. Now, according to some estimates, this could be just slightly more, but this was from the Tax Policy Center. So what happens is that this nonprofit group looks through and combs through all the data, and they're expecting that 16 million filers to take advantage of the deduction for 2018. Now, this is down from over 36 million that took advantage of it in 2017. Now, here's why. The standard deduction for 2018 is nearly double the level for 2017, rising it from $6,350 to $12,000 for those of you who are single filers, and from $12,700 to $24,000 for those of you who are married couple filing jointly. The standard deduction is the amount filers can subtract from their income if they don't list itemized write-offs for mortgage interest, charitable donations, and state taxes, and anything similar on their Schedule A. As a result, the filer's itemized deductions for 2018 will need to be greater than the new standard deduction amounts for the filer benefits from the basically listing the deductions separately. So let's take an example here. Say Jane and her husband Robert donate $10,000 to charities each year, but now their mortgage is paid off, so they don't have that anymore, and other itemized deductions that they have basically equal $10,000 of the state and local tax, SALT, for a total of $20,000. Now, last year, 2017, this couple will want to itemize deductions on their Schedule A because that $20,000 exceeds the $12,700 of itemized deductions. For 2018, however, they will want to take the standard deduction of $24,000. The reason is because this will exceed the $20,000 basically total that they would have had on their Schedule A. Now, kind of thinking through this a little bit more, this means that Jane and Robert won't get the specific tax benefits for giving to charities in 2018. For charitable donors who want a tax break, there are other ways around the change. Now, one thing we've been talking about a lot is what we call bunching. And this is where you can donate every few years so that you can donate a higher amount over the standard deduction and can kind of surmount that amount. So going back to our example, Jane and Robert, they donate $20,000 every other year. Now they could itemize in those years and claim the standard deduction in the years they don't donate, and then they can claim the itemized deduction in the years they do. There's also another way that we have really advocated and used very heavily at times for certain individuals and their needs. These are called donor advised funds. Now these are basically ways that we can enable donors to bunch all of their donations together into one gift, and we can gift that amount to a large basically amount, so we can have a large deduction in the year of the gift. Now, the donor can then designate different charities from there as recipients. So what happens is now you can receive the charitable deduction in one year, but you do not have to donate to all the different charitable charities, I should say, in the same year. So the assets can be invested, and they can also grow tax-free. So donors, this is a great way for you to consider in the future how you can use the new standard deductions to to your benefit. One more thing to think about here. Those of you who are over the age of 70 and a half and still want to be donating to charities, another good strategy is that you can have basically your required minimum distributions go directly to charities, and you can contribute from there as well. Now, this will not have a taxable impact. The only thing is that you will not get the deduction. So that's really what I wanted to focus on, is that there are still ways that you can use the new tax laws to your benefit. And with that, as you have questions, we're here to help. Thank you for watching.